Hi there, traders. I'm Brad Gilbert, the founder and CEO of Traders4Traders. Now, I want to explain to you why I think most traders fail prop firm challenges. And by doing so, hopefully you can recognize where you're making mistakes, you can correct those errors and get back in the winner's circle quicker than ever. Now, first of all, most traders have no structure to their trading process. Now, there's two important components that you need to understand if you want to be consistently successful. And what I'm talking about is the technical aspect of the market, and this is these trend lines that you can see on this chart, okay? Resistance trend lines on the top side, support trend lines on the downside. These are critical levels where you will see momentum shift. Now, if you don't understand that these exist, right, and you can see very clearly here that there's structure. You can see on the downside where to potentially get in on a break trade, or if you're looking for the trend trade. And the same on the top side. Now, that makes things a lot easier. Let me just show you how it looks if I take these trend lines away, and these are the trend lines that the institutional bankers are looking at, and you come back to this market, and this is where most traders are looking, right? They have their charts with a bunch of indicators trying to work out when to get in, when to get out, and that's not the way the markets work. You can be getting in here oblivious to the fact that there's a massive support trend line just below here. You get short, and all of a sudden, it's 30 or 40 points higher, and you're locking in large losses. Now, that's the first port of call. The second area where traders fail, it's they don't understand the market, the connections between the various market components. And I'm talking about the equity markets, the bond markets, and the currency markets. These three markets themselves work together. If one's going up, it impacts the others, and vice versa. If you understand this connection, then you will be able to read the market and know what to do, what instrument to get into, and which ones to avoid. And that's most important, especially when the markets discombobulate, and that's a time you don't trade. So if you're looking at the markets just by looking at the charts with indicators and just guessing on price action, is it going to go down or is it going to go up? Well, stop guessing, get some structure around your trading process, and give yourself the best possible chance of success. Now, number 3 on my hit list, there's no trade plan. And this is super important. Now, when we're trading, how much we lose and how much we make, it's not a guess. We know exactly how much we plan to make each trade and how much we are going to lose if it goes against us, right? That's very important. If you're failing to plan, you're planning to fail. Now, what I mean is when you go into a trade, we know exactly how much we're going to make and how much we're going to lose if it goes against us. You need to have that structure. You just don't open a trade at a level looking at the price action and then leave it to your emotions. Because I can tell you, as soon as this trade starts to go against you, you'll get nervous, you start getting the sweats, and you'll close out the position for a small loss. Then you will go again, thinking, okay, the price action, it's coming back. I'm going to get this one right. Then all of a sudden, it goes against you again and again and again, right? Trading without any structure, without a plan, you are destined for failure. Now, as soon as that trade, you go long and euro starts to go up a little bit, you start to get nervous. You close out the position. It goes against you. You let it run. And then all of a sudden, you've got a bigger drawdown. Now, generally speaking, if you don't have a trade plan, what will happen is you'll lock in large losses and you'll take small profits. So once again, having some structure around your trading opportunity, and if your entry level is here, you need a stop loss of a minimum of 25 points and a take profit of 75 points. Now, the idea behind that is it's a 1-to-3 risk to reward ratio, and that will keep you in the game. Now, that's our ideal scenario, but it doesn't mean we always make 3-to-1. Now, you may have a trade in play. It may go up 15 or 20 points, and then it may stall. Well, then great, lock in that trade. But the structure of your stop loss remains consistent on your next trade. You go back to the trading opportunity, you're looking for an entry, you've got your take profit 75 points higher and your stop loss 25 points below the market. Okay, this is a simple structure that you need to have for every trade that you put on. As I said, if you fail to plan, you are planning to fail. Now, number 4, it's market conditions that determine how successful you are overall. Now, you could be the best trader in the world with the best strategies, But if the market's not moving or moving erratically, well, then your chances of success are very minimal. So understand that. It's the market conditions. So don't get frustrated with what's happening if you're not making money or things aren't moving and you're trading, trying to generate cash out of a non-existent sort of movement. It's like trying to get blood out of a stone. So understand market conditions switch on and then they switch off. You need to be able to recognize that so you don't get frustrated. You don't experience performance anxiety and start trading irrationally, because that's a sure recipe for disaster. Now, number 5, traders change their trading strategies based on a small amount of trades. Changing from one strategy to the next won't help you. It won't change your outcome. In fact, it will confuse you. And then you'll be searching on YouTube like you are now, looking for the next answer. What's the strategy? How do I get in? Where's that next indicator? And I can tell you, having that structure to your trading, it's a recipe for disaster. And the only reason you're doing it is because you don't understand how the core market dynamics work. Now, the more you trade, the more you can refine your trading process. You can analyze your performance, your losses, and your winning trades. And you can work out very clearly what strategy works best for you. But you can't do that if you keep changing your strategy every week based on your performance. Now, over the course of time, traders will refine their structure. They'll work out whether they are better break traders looking for breaks of trend lines, or whether they are range traders or trend traders for that matter. But if you started chopping and changing the general structure of your strategies, then you'll never know when you're at your best. And by searching on YouTube, looking for that next robot, that next indicator that's going to give you the secret edge, well, that isn't the answer. Once again, it comes back to simple market dynamics, technical analysis, and fundamental analysis, understanding what you're looking at. And once you understand the simple dynamics between the equity markets, the currency markets, and the bond markets, well, I tell you what, it's very easy to see where the instruments are going. Then you've got the key levels and it all comes together. And then you can apply your strategy, whether it's a break trade, a trend trade, a false break trade, or whatever it might be, then you can start nailing it more consistently. And last, but definitely not least, there's absolutely zero respect for the account. And that's what the prop firms are hoping for. They hope you go in with no plan, no structure, no capital management. And they hope you change your trading strategy every other day because they know you're going to fail. So get some respect for the account. You've paid good money for the challenge. Focus on the drawdown limits and make sure your trade plan fits inside those, especially the maximum loss. And then you can start focusing on good trading opportunities with structure where you have got the highest probability of success. And that's one of the keys to passing these prop firm challenges. Focus on the drawdown limits, not the profit targets. Now, first of all, ensure your trade plan fits within the daily loss limit. Nothing worse than hitting the daily loss limit because you got emotional. As Mike Tyson said, everyone's got a plan until you get punched in the face. So plan your trade before you even open the position. Know the limits you've got to work with on a daily basis, but most importantly, the maximum loss limit. And say, for instance, you've got an 8% maximum loss limit. Well, if you risk 1% on each trading opportunity, and that's a decent amount, you've got 8 trades to get it right to make the money before you hit that maximum loss limit. And if you're patient, disciplined, and controlled to stick to your trade plan, to the capital management structure and your strategies, well, then you're going to have the best chance of success. Don't forget, we're looking for the best trading opportunities, not just the okay, average looking, or just trading price action. That is a mistake. So if you have everything in your favor, as I said, you've got a trade plan, you've got a strategy that works, you understand the market, you can see clear direction, you've got technical levels where you can get in and get out, then all you need to do is overlay the fundamentals. And I'm talking about the economic numbers, which give these markets clear momentum and direction. And then you're making money. Okay. You're trading a different game. No longer are you at the casino. Instead, you're managing live cash from prop firms. You respect the money because that's how you're going to become successful, making money once you become a live trader. Now, I hope this explains where you might be going wrong. If you're looking for some answers, sign up for our free introductory course. or check out our financial markets trading masterclass. It has all the answers you need to become a consistently successful trader. No longer will you be guessing and paying for resets with these prop firms. You'll be able to sign up confidently knowing that you have the edge, you are going to be successful, and then you can start trading real cash and making serious money just because you know what's going on. Good luck, traders. All the best. Cheerio.